All right, smart money traders, good to see you back here again. And in today's video, I'll be responding to a very powerful question that I've been asked severally. A lot of people have reached out to me concerning this particular question. And for those of you who have started making money in Forex and you feel you want to improve more and make more wins than losses in the market, this video is going to help you a lot. This video is exactly what you need. Have you ever been in a situation where you actually did analysis on the market and after doing analysis, you decided to go into a particular trade, but then few minutes or few moments after trade have started going in your direction, you decided to break even, and then price, after moving to a particular distance, it came back to your break-even level, removed you and moved in your direction. So this is the particular question I've been asked: how to do break-even properly. By the way, if you're coming here for the first time, you're welcome. And for some of you who have been coming here, you will observe that I've come up with a different method of teaching. So I decided to start this method of teaching so I can help you properly. And for any reason, if you don't feel this one is okay, you can let me know, then I'll go back to using my screen on my computer. This is something I've just decided to come up with so I can help you become a better trader. So if this is one of the ways I will help you to become a better trader, then I will be glad to do that. By the way, give this video a like, share, and also if you have a question, let me know in the comments. This is how I get to respond to all your questions. So a typical example is this. All right, let's take this particular price action. For example, you see price went up, boom, to that area, and you have something like a shift in market structure here. You have a bearish mitigation block. Price is here. You decided to go bearish, and you can see that price went bearish. All right, let's say you took the trade from here, from that particular fair value gap. Let me adjust this right here. Your stop loss is obviously there, and then you decided to target maybe the low of that place. All right, but as soon as price starts moving in your direction, all right, this is just an example anyway, you decided to move your stop loss to break even, and then price came back and removed you before finally going in your direction. Now, so many people have been in this situation and you are wondering, why does it always happen to me like that? I will show you a better way of doing it, because trade management is another skill in itself. Aside from you being able to notice where to take trades, doing your analysis properly, you need to know how to do trade management. All right, so let me show you that. A typical example, I actually saw one today, and I know so many people will fall into that trap. All right, look at this particular place. If you look carefully, just an example, you have price having something like this, came to this area, creating what? Institutional swing point, which is a bullish mitigation block. Obviously, if you are to do premium and discount from here to here, let me make this properly so you can see it. I think I have tempered with the colors, so let me quickly adjust it. All right, so let's say you are doing premium and discount. This is from here to here, because look at this, price went up all the way to this area. Can you see where this particular candlestick is before finally pushing lower into this area? Some of you that may decide to take the trade from this particular fair value gap, you would bear with me that price have started now going in your direction. Price has been moving, you can see, moving all the way to this area. And this is where some of you will move your stop loss to break even. So let's say you're taking the trade from there. Let's have it properly here. You are taking the trade from there, and your stop loss is going to be below here. Your stop loss is going to be right below here, just a typical example. And maybe you may be targeting somewhere up above, Not really sure where you may be targeting, just an example anyway. As soon as price starts moving, you decided to move your stop loss to break even, which is here, so that you'll be running on zero risks. But then immediately price came back, boom, removing you, and then it went up all the way to that direction. All right. So many times traders make that mistake. Let me save you the trouble of being in this kind of a situation. Now, you know your very basic of market structure properly, right? Market structure is one of the ways that you would be able to trade with understanding and knowledge. So let's assume you have price moving this way. You are expecting this downward to end so you can start a bullish movement, creating a proper buy model. So as soon as you see price shift structure here, maybe because you've seen price create a fair value gap, which is probably having a confluence with this bullish mitigation block. By the way, all these concepts I've taught them and they are originally from ICT himself. A bullish mitigation block, bearish mitigation block. You can find them on my YouTube channel. So as soon as price shift structure, you decided to allow price come here. This is where you activate your trade. As soon as you activated your trade, you are now waiting for price to go in your direction. So as soon as price came here, from here to here, you decided to move your stop loss, which was here to this place. And then price decides to do like this, remove you before going up. And you're wondering, why does it always happen to me? Let me save you the trouble. So every time you are taking this type of trade, all right, every time you are taking this type of trade, this is what you should do. If you have a bearish momentum or you have a bearish trend, as soon as price creates your buy model, when price comes back to your fair value gap, which is probably there, or maybe the bullish mitigation block, depending on how the entry will be, always use the basic knowledge of premium and discount. Whichever one is in discount, you decided to enter a trade here. All right. One of the things you should do is to employ patience. So if you are entering a trade here, as soon as price starts going, now this is a market structure shift here, and this becomes a break of structure. What does that mean? Break of structure is always for trend continuation. And that is the only reason why you should believe in this price movement. Once price breaks structure, it assures you or it gives you some level of confidence that price is ready to continue in an upward direction. Hence, you would be able to carefully watch out and shift your stop loss to break even. Until you have a break of structure in the same direction on your time frame of entry, you don't have any reason to move your stop loss to break even, because price can come to this high and react from this high before going up. All right, depending on how big the movement is. As soon as price did that, you will be regretting, and then all of a sudden you will see price, after creating your perfect movement, it moves in your direction and it hits the intended target you were having. So this is the mistake a lot of traders are making. You now see where you're making the mistake. So as soon as price, let me sketch it again. So as soon as price starts the movement, you see, it starts, if it breaks structure, BOS, it simply means that it is ready to continue the upward direction. But until you have a break of structure, you don't have any reason to move your stop loss to break even. It's a planned trade. You have planned for it. So anything you have planned for, you have to stay careful until the trade reaches your intended take profit. All right. So you will see a lot of examples. You will see a lot of examples. You will see so many examples. Let's take this area, for example. I'm just giving you a random example. I'm not using an analysis to give you this. It is just my own way of helping you understand the market properly, right? And if this pattern of teaching is actually helping out, let me know in the comments. So let's take this location, for example, going down. All right, so still on the same example I was showing you. Remember that location we took the trade. Most of you people after price probably have reached your POI, point of interest. Maybe your point of interest is somewhere around there. Let's say this area. So price is now inside the point of interest. What you need is a shifting market structure in the same POI, all right? And then from there, you will decide to go bearish. Perfect, perfect. But now listen to this. When price came up right there, creating this shifting structure right here, after price have created this shifting structure, what do? You look for an institutional reference point. If you look carefully, you can either use this place or this place. You have a fair value gap here. I wish I can show that properly. You have a fair value gap here. This line must be a bit dark so you can see it. All right, so that you can see what I'm drawing for you. So right here, you can see this place. You have a fair value gap right inside of it, so you will not get confused. So at that area that price came to, you decided to enter the trade, and you have put your stop loss on a bearish movement. You have put your stop loss right above there, and your target is probably down. All right, I hope this is understandable enough. So as soon as price moves, remember, if you look carefully, this was the low. You have not started seeing a break of structure to the downside. Price did not break structure here. It did not break structure here. It did not break structure here. So you have no reason to move your stop loss to break even. But you know what some of you will do? As soon as price starts coming here, you are moving your stop loss to break even. And then look at what price will do. It will come back and remove you here and continue going down. But the reason why I said you should be careful or you should wait for a break of structure is here. As soon as you have the BOS, immediately after having a BOS, price no longer came back to this area. So as soon as you have this, you can move your stop loss to break even. Look at what price did. Came back just here before the movement continues. All right. So this is the very, very basic thing you need to understand about breaking even. I hope I'm able to explain this in a way you guys will understand. And if you have any question like this, you can let me know in the comments and I will try as much as possible to keep responding to your questions and then help you out as you keep learning, keep learning, keep learning and become better in trading. Thank you very much, guys, and see you in another video.